All right, so let's dive right in. We've got some serious crypto waves to ride today, starting with the potential tidal wave of taxes coming out of Italy.
Yeah, this Italian news has really caught my eye. We're talking about a possible tax hike on Bitcoin gains.
Okay, so break it down for me. How high are we talking? What's the percentage?
They're looking at a jump from 26% to a whopping 42%.
Whoa, 42%? That's a serious chunk of change. What does that mean for like the average Bitcoin holder in Italy? What are capital gains taxes anyway?
Well, imagine you're an investor and your Bitcoin investment doubles in value. Capital gains taxes basically mean the government takes a cut of that profit.
Okay, so it's like a tax on what, winning the crypto lottery?
In a way, yeah. But here's the thing, a jump from 26 to 42%, that's a huge difference. That could seriously discourage people from holding onto their Bitcoin, especially in Italy.
So are we looking at like a mass exodus of Bitcoin from Italy, investors packing up their digital wallets and heading for greener pastures?
It's a real possibility. And it raises a bigger question. Governments all over, they're still trying to figure out how to handle this whole cryptocurrency thing.
Yeah, it's uncharted territory, right?
Exactly. And what Italy does, it could set a precedent. Other countries might be watching this closely, thinking, hey, if they can get away with a 42% tax.
Oh, so it's like a domino effect, potentially? One country makes a move and then others follow suit.
Potentially.
Yeah.
And that's why this is such a big deal. It's not just about Italy. It's about the signal it sends to the rest of the world about how crypto might be taxed in the future.
It really makes you think, doesn't it? Like, what does this say about how governments view the whole idea of digital currencies? Is it a threat? An opportunity?
Well, and it's interesting, right? Because this comes right after Italy made changes to their digital services tax.
Ah, right, right. I read something about that, but I'll admit I skimmed over the details. What's the connection there?
Well, they basically removed a minimum revenue requirement for that tax.
Mm.
So potentially more companies are going to fall under that umbrella.
So they're casting a wider net, pulling in more of that digital economy revenue.
Exactly. So it seems like Italy's sending a message like, hey, we're paying attention to this digital world, and we're not afraid to use our tax laws to, well, get our piece.
Interesting. Okay, so from serious tax talk, how about we lighten the mood a bit? Remember that whole Trump family crypto project with the NFTs?
Oh, yeah, that was
That's
interesting.
one word for it. Big promises, big names, and, well, how did that actually turn out?
Not great, to be honest. Remember, they were aiming for like $300 million.
$300 million? Yeah, a cool 300 a little.
Right. But on the first day, they only sold something like 3.4% of their tokens.
Oof. That's not exactly a roaring success. Not the kind of art of the deal we're used to hearing about. What happened?
Well, there were those reports of website crashes,
Yeah.
blaming it on all the traffic.
Right, because when I think high traffic websites, the Trump family immediately comes to mind. Okay, I'm just kidding, but seriously. Was it just technical issues or was there something else going on? Was there just not the appetite for Trump NFTs?
That's the million-dollar question. Maybe the project itself just wasn't that appealing. Or maybe, and I'm just, speculating here.
Go on, speculate. That's what we're here for.
Okay, well, maybe the Trumps being involved, which they probably thought would be a huge draw, maybe it actually backfired.
Yeah, it's like they thought they were putting a Trump tower on the blockchain, but it turns out no one wanted to buy a digital condo.
Something like that. But, it's all part of this wild world of crypto.
It really is. Speaking of wild, Coinbase and Glassnode came out with a report saying that the crypto market is actually maturing. Maturing!
Yeah, they use the word maturing. And they actually have some really interesting data to back it up.
Okay, you've piqued my interest. Before we jump into all that, though, what do I mean by maturing? Because frankly, when I think of mature and crypto, those two words don't exactly go hand in hand in my mind.
I hear you.
I mean, I get it. Markets mature, they stabilize, they become, dare I say, a little less exciting. But when I think crypto, I think innovation, disruption, the Wild West. I don't picture like a retirement plan.
Right, and look, no one's saying Bitcoin's about to start offering senior discounts.
Mm-hmm.
But there are signs, real signs, that the market is finding its footing. Think about it. Remember those insane price swings? Those dizzying highs and lows we used to see all the time?
Oh, how could I forget? I think I aged about 10 years every time I checked my portfolio back then.
Exactly. But here's the thing. Coinbase and Glassnode, they're seeing some pretty compelling evidence that those days might be behind us.
Okay, so less roller coaster, more, what, like a gentle Ferris wheel ride?
Something like that. But seriously, let's talk about the data, because it's pretty interesting. First of all, there's been this massive inflow of money into Bitcoin ETFs.
ETFs, those are like what, baskets of assets, right?
Yeah, exactly. Think of it as a way to invest in Bitcoin without actually owning the actual Bitcoin.
Ah, so a little less risky, a little more hands-off.
Exactly. And we're not talking small potatoes here either. Billions of dollars are flowing into these Bitcoin ETFs. And you know who's doing a lot of that investing?
Who? Don't keep me in suspense.
Institutional investors. The big players. Hedge funds, asset managers, the whole Wall Street crowd.
Wow, so they're finally taking crypto seriously, huh?
It seems so. And that's a big deal because those guys, they don't usually jump into anything without doing their homework.
That's true. They tend to be a bit more, shall we say, risk-averse than your average crypto enthusiast.
Exactly. So their involvement, it suggests a certain level of confidence in crypto's long-term prospects.
Okay, so institutional money's pouring in. That makes sense. What else are Coinbase and Glassnode seeing?
Well, for one, blockchain activity itself is way up. More transactions, more users, more real-world use cases.
So it's not just a bunch of people buying and selling Bitcoin hoping to make a quick buck.
Not anymore. It's being used for more than just speculation. It's actually powering transactions. It's becoming part of the fabric of the digital economy.
Okay, I like the sound of that. It's like crypto's finally growing up and getting a real job.
Exactly. And the most telling sign of this maturation, the thing that really caught my eye, is the decrease in Bitcoin's price volatility.
Okay, yeah, we were talking about those crazy price swings earlier. So how much has the volatility actually gone down?
Well, get this. In 2021, Bitcoin's price volatility was hovering around, get ready for it, almost 130% over 3 months.
130%. That's insane.
I know, right? But guess what it is now? Less than 60%.
Wow, okay. That's a huge difference. Still not exactly a walk in the park, but definitely a lot less likely to give you whiplash.
Exactly. And that's what I mean about maturing. Is it still risky? Sure. But is it as unpredictable and volatile as it used to be? Not even close.
So what you're saying is the crypto roller coaster is maybe slowing down a little bit, maybe becoming a bit more, I don't know, predictable.
In a way, yes.
But does that mean the excitement is gone? Is crypto becoming, dare I say it, boring?
No way. Remember, the early days of the internet, it was pretty wild. But as it matured, as it became more integrated into our lives, it didn't become less innovative. If anything, it became more so.
That's a really good point. So crypto's not losing its edge, it's just, I don't know, refining it, becoming more sophisticated.
Exactly. And I think Coinbase and Glassnode, they summed it up perfectly in their report. They said, and I quote, "From the runaway success of spot ETFs to the spike in on-chain activity to the upswing in trading volumes, it's clear that markets have grown deeper, more liquid, more sophisticated, and more accessible."
More sophisticated? Now that's what I like to hear. But what does all of this maturing actually mean for, the average person who's just trying to navigate this crazy world of crypto? So we've gone from Italy trying to, what, grab a bigger slice of the crypto pie to the Trumps testing the waters of the NFTC and maybe not loving the temperature, to some pretty compelling signs that the market itself is, well, growing up.
It's true. Today's deep dive really highlights just how dynamic and, frankly, unpredictable the crypto space can be. What seems like a sure thing one day can vanish overnight. But that's also kind of what keeps things interesting, wouldn't you say?
Absolutely. It's like we're all along for the ride, holding on tight and seeing where this crypto rocket takes us. Though maybe it's less of a rocket these days and more of a, I don't know, a self-driving car.
Maybe. But the destination is still unknown, which I think is part of the allure. And look, whether you agree with Italy's tax strategy, or you're still scratching your head over those Trump NFTs, or you're feeling cautiously optimistic about this whole maturing market idea, one thing's for sure. Crypto is making waves.
Big waves. And those waves, they have a way of reaching all corners of the financial world, don't they?
They do. So here's a thought I'll leave you with. As we wrap things up today, think about this. What kind of impact do you think these waves will have? What does it all mean for the future of cryptocurrency, for its role in the global economy, even for your own personal finances? It's a lot to ponder.
It really is. And while we may not have all the answers, or a crystal ball, though that would be handy in the crypto world, wouldn't it? Hopefully, this deep dive has given you some food for thought, some new insights and perspectives to consider as you navigate this exciting, ever-evolving world of crypto.
I think that's a great way to put it. Because at the end of the day, the future of crypto, it's not just something that's going to happen to us passively. It's something we're all actively shaping, whether we realize it or not, through our choices, our investments, even our conversations about it.
Well said. So until next time, keep those crypto conversations going, keep asking questions, and stay curious. Because one thing is certain, the world of crypto, it never sleeps.